Now, the biggest talking point on Wall Street this evening is IBM, with its share plunging as much as 24% in early trade after the tech giant reported weaker than expected preliminary earnings for the second quarter. Moreover, the company issued a stark warning that AI spending boom is beginning to squeeze global enterprise software budgets, raising fresh concerns about the sector's growth and outlook. Joining with me today is Rajeev Agarwal, Managing Partner at Dura Darshi India Fund. He's joining us from New York. Thank you so much, Mr. Agarwal, for joining us today on ET Now. Now, help us, help us understand what will be the impact of, this IBM plunge on the broader IT sector, both in India and globally.
Yeah, it's very interesting. Good morning and good evening to you. It's a very interesting setup we have in the whole AI space, where because the technology is evolving so fast, you have some companies that are spending a lot of money. Everybody is trying to figure out how to use it best, and yet the efficiency of AI is still in question. And this warning from IBM, who is obviously an insider of the industry, tells us that clearly there are different views in this fast evolving environment. I do think that from how it will impact the AI companies as well as IT services companies remains to be seen. My original hypothesis was that ultimately AI would be useful in its applications, but right now we are not seeing a big lift. So it remains to be seen whether that will come or this will become more of a bubble.
Did it come to you as a surprise? And is IBM faltering isolated, or is it, like a warning sign for the entire enterprise tech?
I think it is, frankly, IBM is a fringe player in AI. And so what I feel is there are two divides that are happening in the IT industry. One are the big AI players, and then the other one are the enterprise players. AI players keep talking about how good AI is, and enterprise players are still trying to figure out where the benefits of AI is, right? And so what you are noticing is the divide where one set of players talk about only the good things about AI, while the enterprise players, be it the IT services players or IBM or Accenture or what you may have, I think they are saying, listen, where is the efficiency? Why are we spending so much money? And to me, unless the efficiency comes, you will once again see IT services and enterprises once again gain ascendancy. And that is something that we still have to see and evolve. If I look at my own use, I do find, for example, and I will give you a very interesting example I recently had of AI. One of the stocks had fallen or gained a lot, and I was trying to figure out from AI what happened. And the answer it gave me was actually a wrong answer. And it gave me with so much of confidence that I initially believed that answer until I did a lot more work and found that the answer was wrong. So clearly, AI still has a lot of work to do to make it reliable.
So you're saying that, this entire AI boom has clear winners and losers. Help us understand our investors seeing this.
Yeah, I think investors are themselves trying to make a lot of sense of what is happening in the industry. Clearly, initially, there was a lot of momentum with the AI players, the semiconductor players. And in the last few weeks, we have seen, especially on the semiconductor side, some of that shine come off. And frankly, investors are really trying to understand where the businesses are going, because as the businesses do, so will the investments, and so will the investors. So I do believe that this is a time where we need to be watchful of the data and really take a view much more dependent on how the evolution of this technology is, rather than have a very predefined opinion which you might want to just express through your investments.
Right, Mr. Agarwal, thank you so much for joining us today on ET Now and sharing your inputs on the IBM plunge.